Mr. Steve Clapham, who is an author. You guys have to check Steve out, get on his mailing list. He provides a lot of great insights to what's going on. Welcome back, buddy. How are you, Steve?
Well, I'm very well. It's unusual in London because it's a beautiful sunny day, and I got my lunch. I thought, you know what, I'm just going to eat my lunch outside. So I took the Financial Times, and I was sitting there by the canal, eating my lunch, reading the F.A.C.E, and I thought, you know what, I can't really be bothered going back into the office. And then I thought, oh shoot, I better run because I've got Dale. So I got here just in time.
Steve, gosh, you know,
but
you could have taken the day off.
It's such a rare event that I get to come on the show, and it's such a rare event that it's sunshine.
I thought a sunny day in London is a rare event.
Yeah, well, and the two things together,
it's overwhelming.
Never happened before.
Yeah, it's almost like I don't know, the debt ceiling, and then Biden getting on camera, and underneath it says crisis averted.
Yes.
Did that remind you of anything, Steve, when you saw that crisis averted?
Well,
go ahead.
I've written about this, and I thought it was really bizarre how people were so worried. And, you know, I went to Omaha this year for the very first time, and Buffett was talking about he bought $3 billion of the short-dated yield at a 5 handle. And he said, you know, this is attributed to the debt ceiling problem. And I said, well, you know, we've only ever had this once and it got solved. And won't it get solved again? I just didn't really understand why people thought, oh, is America going to give up on its responsibilities? I mean, I know that there's a lot of political argument over on your side of the Atlantic. I mean,
it's never been like this.
But I mean, it just seemed inconceivable to me that it was that much of a worry that people didn't want to buy short-dated treasuries. I mean, it makes no sense. But you know what? The older I get, the more I learn about how little I know and how stupid the markets can be. And therein lies the opportunity for sensible people.
Yeah. The herds run, the lemmings walk off the cliff together, and we recognize things in the market well before the markets do. I was reading a tweet by a pretty famous trader, and he said his big macro ideas always took so long to happen and destroyed everything in his life till it happened, and then he wasn't there. So he just trades the moves now instead of being a macro guy. Yeah. So anyway, in this environment, stocks still acting good. Bonds. I want to ask you about the bonds here, Steve. So,
well, can we start in Japan? Because when I came in, you were talking about Japan, and I learned something really interesting recently. So one of the European asset managers has an investor day in an afternoon in a swanky London Mayfair hotel, and I went along. And what it is they have, I don't know, their fund managers from, I don't know, maybe a dozen funds do a presentation to a small group, like 10 people or 20 people, over and over through the afternoon. So you can go and listen to a bunch of fund managers trying to persuade you to invest in their fund. And the first one I went to, I sat next to the chief executive of the company, and it was a Japanese fund. And it was quite an older, I mean, almost as old as me, fund manager, obviously very experienced. And he looked slightly nervous because his CEO was in the room. But he said something really, really fascinating. So this was a small fund. It's about $150 million. But the manager, I mean, he is quite old. And he said that the latest development in Japan is an edict from the Tokyo Stock Exchange, which is, you know, it's had a mission for some time to improve governance and make Japan more attractive destination for investment. But this development is an edict which requires companies whose stock is trading at below book value to publish a plan to improve their valuations. Now, the problem with Japan for years and years has been, they might be sitting on a massively valuable asset, but they won't do anything with it. I remember one media company which had a property which was worth more than the market cap, and when asked, they, well, why don't you sell the property and buy all your stock back? Oh, well, it's a very prestigious property. I wouldn't want to move. So that, they completely ignored stock market pressure, but now they'll have to explain why their stock is below book value and what they plan to do about it. What's really interesting about this is that this manager thinks that, well, I'll let you guess, Dale, what percentage of Japanese stocks do you think trade below book value?
None.
50%.
Oh, okay.
And this
guy, is that why we're getting all these parabolic moves here?
Well, I don't know. I mean,
what's behind this?
Well,
so no wonder that guy is holding investment seminars and renting fancy hotel rooms, because there's nothing like a parabolic move to get investors to come late to the party, or at least late short term to the party. But this is a PR right here for that guy.
Yeah,
right.
Well, I think that's a combination of things. So one thing is that the foreigners have been, until the first quarter of this year, have been net sellers in Japan, and the largest buyer in Japan has been the corporate buyer. It's been buybacks. Of this guy's portfolio, he's got 50 stocks in his portfolio. It began buybacks for the very first time in Q4 22. And the corporates are already the big net buyer of equities. And it may just be that the selling has started to dry up. You've had Buffett waxing lyrical about Japan. The foreigners may have stopped selling because it's the cheapest market in the world. And if people think that they are going to buy back their stock, this is what David Einhorn was talking about. So David Einhorn was presenting in London at a conference maybe 3 weeks ago. And he was saying that his strategy has fundamentally changed. He said, he was talking about there aren't enough value investors out there now. And typically what he used to do, he had a very similar strategy to me, or perhaps I had a very similar strategy to him. But what we used to do was we used to find stocks whose earnings had been underestimated by the market. We used to buy them, wait for the street to catch on that their earnings were going to beat, and then the stock would be re-rated. And this was a very surefire way to make money if you were, a detailed analyst like me or Einhorn's team, because we would be digging around. We'd find a stock that we had high confidence that the earnings were underestimated. It would then come, it might take a quarter or two for it to start beating, but the estimates would go up. Now, if your estimates go up by 15%, the stock will go up by 30% because you also get a benefit in the rating. And what Einhorn was saying when he was in London is that this doesn't work anymore because there aren't enough value buyers around, particularly in the sort of lower end of the market. So what he's now doing is he'll buy something, it'll beat, but nobody will care. And what he's saying is that, you'll buy something that's on 15 times earnings, it'll have a beat, but it'll get derated to 12 times because nobody's interested. So now he's got a different strategy. What he's doing is he's buying stocks where he doesn't need another investor to come in and buy the stock and re-rate it, because the company itself is resolved to do buybacks. And he said that he said it's a much easier situation because even if you don't get the forecast right, he says he's had situations where the company has missed, and it's missed by 10%, and nobody's even noticed. The stock has barely gone down. And this new idea that we should pay more attention to the corporate buyer as the buyer of last resort, I think is quite an intriguing one. And it is definitely already happening in Japan. Whether, to what extent it has caused that parabolic move up.
Didn't they own a big chunk? Didn't the government or the Treasury or the central bank have been a big buyer of Japanese stocks for a long time? They came in and supported the market. So, this must have been a huge payday for the government.
Yeah, well, I suspect that what's happened is, so the Japanese government's been buying a lot of ETFs, and probably what's happened is that the selling has mopped up, and the Japanese, the retail is a big part of their market, and the retail they move. I mean, you think the US market is herd behavior, man? Japan, they move together. And this could just be the Japanese domestic consumer or Japanese domestic investor saying, you know what, we think Japan's cheap now. And it's had a breakout. And I think that's what's happened is that the market's broken out. And I don't remember, is it a 30-year or 35-year trend?
Topped in 89.
89. So what's that? That's 34 years, right? So
there you go. Right here, back here.
Yeah.
So everyone's saying we're on our way back to those highs.
Well, I mean, there's one of those highs that has actually broken, hasn't it?
Well, the Nikkei high is up here.
It's okay, I think there's another. I've forgotten which measure it was, but I think we were very close.
But here's 89. You see it to the left?
Yeah.
Right there. So that was higher.
Okay.
Well, but I mean, huge move.
Yeah.
I'll tell you what, short term, I wouldn't go to that. I wouldn't join that guy's fund for a month or so. You're getting a key reversal while we're talking, and they're done over there, right? That's not a good sign.
No,
we could pull back 3,000 points.
Yeah, no, I think you could easily see a big pullback, absolutely. Yeah. But
do you think it has anything to do with yield control or maybe a shift coming from the central bank at all, Steve?
Well, I don't know. They've got a
new governor.
The new governor, and maybe I mean, I don't follow it that closely day to day. Maybe the new governor said something.
Oh yeah, you follow the BOE. It's much more interesting, isn't it?
Well, the BOEs, I mean, the trouble with the Japanese is they never say anything, right? So, you can follow them for years, and it takes years before they say anything of interest, whereas at least in England, they're constantly putting their foot in their mouth, and constantly screwing up. I don't actually have a huge amount of time for our current Bank of England governor. I don't think he's doing a great job. I think he's really political, and his appointment was political. I don't think he's the right person. He's an intellectual. I miss our days of Mervyn King, who I thought was somebody that I had a lot more time and respect for. But Mervyn King is now running the operations of one of the oligarchs. So he's chairman of this company, which is owned by two oligarchs, one of whom is on the banned list. So he's had to step back, and Mervyn King's gone in as the chairman and is earning several $1 million a year for being handling the board, which I thought was quite amusing. It was
whatever he's not doing, cable is outperforming euro for quite some time now, going back to the beginning of the year. Any explanation? Are things that much worse on the continent than across the channel? Why the divergence in, it outperforms when the dollar's weaker on the upside, and it holds up better when the dollar's rallying than the euro does. So why are funds flowing into the pound rather than euro?
Have you looked at the pound? The pound has kept pace. If you go back 25 years or 30 years on the pound and compare the pound and the South African rand, the pound and the South African rand have kept pace over the last 30 odd years. And I just looked at this by coincidence the other day because I was wondering why the South African wine that I like has gone up so much in sterling. And I thought, well, you know, it is impossible because we must have appreciated hugely against South African rand. But it turns out that we're broadly where we were in the mid 90s. And I think that's like incredible because the South African rand has been flushed down the toilet. And the sterling has been flushed down the toilet as well. And yeah, I mean, I think we've done a crap job in running our country. I don't think we're quite that bad. And the idea that we should be approaching parity with the dollar, we got to 103 at the bottom, I thought was just insane. And at 125, I mean, I think sterling's cheap. I said this to you last time I was on, and it was, I don't know, between 115 and 120 then. I don't remember exactly. And I mean, I think that if you look at, you know, purchasing power parity type of idea, that $1.50 is about the right level for sterling. Maybe it's $1.40, but it's still, you know, 10-15% up from here. And Europe is not in good shape. Europe really isn't in good shape. I think Germany, which is basically the powerhouse of Europe, has got all sorts of problems. I mean, huge problems. Partly energy, partly the Ukraine situation, partly that it's got a very heavy dependence on the automotive sector, on the middle stand, the small companies. It's full of problems, Germany, and it's the best country in Europe. You know, you look at France; they're rioting because they're talking about putting the pension age up.
Right.
I mean, they've got the absolutely best conditions in Europe, French workers, and any relaxation of their benefits, they start rioting in the streets. And then, you know, you get to Italy. I mean, Italy, there's a lot of cash in Italy, but you know, they don't pay their taxes. It's got a very, very good infrastructure now, as has Spain. You know, the European Commission has dedicated a lot of funds to them improving their infrastructure. But, you know, their economy, I don't think the Italian economy is that in good shape at all.
No, their banks are supposedly zombie banks, all of them. And recently a pasta shortage in Italy. So that was a crisis. They were out on the street. So in France, it's because of benefits, and in Italy, it's because of a pasta shortage.
We didn't see that. How can there be a pasta shortage?
I read about how the pasta there was because of supply chain.
Oh, come on!
Pasta shortage in Italy. Check it out.
No.
Yeah, go down there with some noodles, and the women will be all over you.
Man, they all make their own pasta in Italy.
Anyway, maybe it's the ingredients, or maybe I read some kind of phony article that I'm disseminating.
Dale, does your wife not let you in your kitchen? You only need.
I don't want to go in the kitchen.
I see. Okay. Well, pasta is very simple to make.
Yeah, for my snacks.
Eggs, flour, and water. So that's it.
Okay. I'm just telling you what I heard.
Oh, see, CNBC. Okay.
I don't think it was CNBC.
Yeah, no, somebody's put it in the chat. I'm going to pasta prices rose by 17.5% in March and 16.5% in April. Well, food everywhere is going up through the roof, isn't it?
Okay.
But, I wouldn't have thought that was such a big deal in Italy, because they all make their own.
We have a very smart audience. They're hip to everything. So you didn't think it was possible? There we go.
Yeah, well, there we go. Yeah, you learn something new every day, and I always learn something new when I come on your show.
Yeah, and you're getting press for your favorite wine, and so it's happening to everybody.
Well, the wine, don't talk about it, because the wine is the wine has become so expensive here because the pound is so weak. And in actual fact, there's a bit of a resurgence in manufacturing of wine in England, but it still remains very, 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 very expensive. But
you really don't have the climate for wine, do you?
It doesn't need to be that. I mean, depends on what sort of grapes you're growing. I mean, I personally, I'm not a massive fan of English wine, and it's very overpriced. Same with American wine. I mean, there are some good American wines, but boy, do they charge. I mean, they're very, very expensive in my view. And you're much better off with, I see you guys are good. Argentinian, Chilean. Yeah, so I think Argentinian wine
see how we're helping you. We're providing wine content for you.
Yeah, well, that's much appreciated.
Anyway, I'm wondering what you and your company are telling people to do in this environment. Should people really be risk averse in here, or aggressive? And what are you saying to people? Because I mean, a lot of people are confused with what's going on.
I wish that I could tell you that there was no confusion in my office, but you know what? I think it's a very uncertain time. I mean, last time if we'd had that discussion, I would have said that we should be very concerned about the economy, and I'm puzzled a little bit as to why those fears haven't manifested themselves. I mean, if you think about I think there's all sorts of weird stuff going on. So there's lots of cheap stocks. That's the good news. But there's also lots of weirdness. So if you had said to me in January 2022, the Fed funds rate will be where it is in June 2023, where do you think the house builders will be in the US?
The home builders, yeah.
The home builders. Right. Yeah. I'd have said they'd be flat on their back.
Yeah.
But they're doing really, really well.
Yeah.
And okay, so there's a bit of confusion there, because it seems that people are locked into their cheap mortgages, so they don't want to move. So if you want to buy a new, if you want to move, you've got to buy a new home. So but there's kind of a lot of second order effects happening that you wouldn't, I reckon I'm reasonably good at
rates have never gone up this fast, this quickly, in this magnitude ever.
And so you would imagine that
there would be lots of repercussions besides SVB,
and the repercussions haven't yet happened. Largely, and I think that the markets are becoming quite complacent on the back of that, because they assume that they're not going to happen. And what I've learned over the years, Dale, is that the one thing that everybody underestimates is the time lags in the system.
You're right.
And I think that, people are saying, oh, we don't need to worry about X, we don't need to worry about Y. And just at the point that they get complacent and they start to buy more, that's when it will all start to unravel.
Well, doesn't 14 VIX say that is exactly what's happening?
Yeah. So people are complacent, right?
Yeah. I mean, I guess VIX could go to 10, but I'd call this pretty complacent. This is a lower reading than at the highs in 2020, at the end of 2020, 21. So for the decline in 2022. So a lot of complacency. So I guess that makes when and if there is a shock, the magnitude of it is going to be larger, because there are more people off sides and not prepared, and just playing musical chairs right now.
Yeah, and markets are higher.
Yeah.
So, I'm pretty cautious because, I mean, just looking at something the other day, S&P put a thing about speculative grade debt. And, there is a lot of debt in the system. And we haven't really had the downturn that we were expecting. But I'll tell you what.
We haven't had the solvency part of it, the credit crisis part of it.
And that surely comes because the interest rates are higher. And so what happens is, so you may not want to move house because you've got a cheap mortgage and you don't want to lose that. But companies don't have fixed rate debt forever. So
no, they don't.
So I think a lot of debt is going to start maturing in the next 3-4 years. And that's going to really put a big amount of pressure on a lot of companies. And what I think it's easy to forget is that the amount of companies in the US that are quoted today is at an all-time low. There's far more private companies than there ever have been. And they're not visible. And that's where the problems are going to be.
Okay. All right. Well, Steve, so you stay in cash, mainly cash.
Well, having said that, we are finding lots of cheap stocks.
Okay.
So,
all right.
I mean,
like uranium popped this last week or this week. There are things that are coming to life. I guess we could wrap it with this. The bears argument is that it has been very concentrated, only 10 stocks leading the way. And the bulls argument is it's going to broaden out, which seems to be happening in some ways. Do you agree?
Well, if it broadens out, I'll believe in it more. But I don't.
So you haven't witnessed it broadening out yet?
No, and so I think it's one of these things. When I see it, I'll believe it.
You're from Missouri. You're the show me state.
Oh, is that what? Yeah.
Yeah. So Steve, I really appreciate you, giving up part of your nice sunny day and lunch to come and have a conversation with me today.
It's always a pleasure to speak to you. I'm heading back out to sit by the canal. They've got a little truck that's parked up, and you can go and get a glass of bubbly. So I'm going to do that while you guys are working hard, slaving over your screen.
Yeah, perspiring and biting our fingernails. Well, let me give you a British saying as you go out there. Cheers, mate.
Cheers. Oh, somebody's asking for my Twitter address. So
yeah,
you can find me at behindthebalancesheet.com, and on Twitter I'm at Steve Clapham, CLAPHAM. But behindthebalancesheet.com, all the links are there.
A lot of wisdom from Steve, so check him out.
Thank you so much.
Appreciate it, buddy.
Take care. Cheers.
Thank you, Steve.
Thank you.
That's a wrap, everyone. You could join the team in 15 minutes on the Morning Edge. And we'll see you all tomorrow. Remember, don't just count your pips, count your blessings. Tell the people you love that you do. They're not mind readers. Clapham, CLAPHAM, Richard. Clapham. All right, you're welcome, everyone. See you tomorrow. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.